Yo, what's up, guys? It's your boy Looney. We just got some big comments from Jerome Powell today, and it shook the markets. And today he came out and actually said that stock prices are fairly highly valued. And as soon as that headline hit, stocks and even crypto started dropping. And one of the biggest losers on the day for my portfolio was Open. And this is a very speculative play. And this really took a significant hit. So let's break it down. But before we get into it, quick shout out to the Discord. It is free to join. And I also offer a premium membership that's $8 a month. And it gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links to that are in the description. But yes, first off, when Powell made comments like this, I believe it was somewhere noonish is when he made those comments, and you can see we saw a drop later in the day, or it started to drop when he first said it and then quickly sold off. And this was sending a warning to traders and investors that the Fed is paying attention to valuations. In other words, the market might be a little overheated. And anytime you hear the Fed chair say something along those lines, it can actually spook traders because it signals that maybe rate cuts aren't going to be as aggressive, or that the Fed is nervous about asset bubbles forming, which is possible. We are seeing massive run-ups since the April lows. I am positioned for a pullback. I have cash available. That buying power is a little bit of my own cash and margin. I also have some hedging strategies that include covered calls, and I have actually some debit spreads or put debit spreads to protect to the downside. And yeah, I'm fully prepared to the downside, but I'm also doing some speculative plays to the upside. That's why I'm investing into Open. I'll show you guys a new position as well. And all this came after they just recently cut the 25 basis points on interest rates, which is supposed to be bullish. And the press conference leaned a little dovish. But today, Powell really pumped the brakes, reminding everyone that stocks have already run hot and valuations are stretched, basically saying that these interest rates have already been priced in and the market is very forward looking. And you get to see how quickly the market reacted. Major positions obviously declining, including Open, like I own, as well as other stocks as well. I'm actually down on the day. I'm down 8.82%. So not massive downfall, but my options are up. I'm up 367, and that's mostly from my covered calls. I also have some debit spreads on Riot, and I did close a call debit spread on SoFi today because although SoFi pulled back, it was still way above my strike prices. So I was able to capture some of those gains. So if I go to my realized loss, and this week from rolling, I am down, but SoFi, I was able to collect that $63 in gain, or 49%. So that's one play that I ended up profiting from. Again, Open, I'm dollar cost averaging in. All my other positions are green. So I am kind of in the same boat where I think stocks and valuations are a little heated right now. And Open did give up a lot of its gains, and I'm actually down 20%. But I also opened up another speculative play, SLNH, and this is a very volatile stock, essentially a penny stock. So a very risky play, but I wanted to do this to catch the upside in case we do go higher, and this is just a buy the dip situation. This is a sort of play that should do well in a interest rate cut environment, something like this. That is a very speculative play. This is actually a crypto miner, or it's involved in the crypto world, and it's pretty similar to Riot and Mara, but it's a lot smaller cap. So I did buy 100 shares today of it, and I put a small bag, so you can see this is only 0.44% of my portfolio. So if the stock, or if the market does continue to downfall, I obviously have those covered calls to help, as well as this debit spread. This is one that I opened pretty recently, and it's showing that if I let it go to expiration, I'll only lose $1. So this is a type of play that helps me protect to the downside. And again, you can see if it does drop even further to that $16 range, I'll be able to collect $37 in profit. And again, I also have cash on the sidelines in case we do see further dipping. But you can see I'm not really buying too many shares. I do have my daily buy into crypto, and this is really for long term, so I'm not paying attention too much. And I just have those going every day, no matter the prices are high or low. I just simply have those going on, as well as Robinhood. Hood is another stock that I'm consistently buying every day. This stock was only up 0.57%. So one of the few that were up or green today. But other than that, I'm not really buying shares. I'm really just focusing on option trading so I could capture my gains quickly and get out or cut my losses short. I don't want to be in a situation where I'm owning all these shares and I kind of round trip. Like, for example, something like Open, where I have a bunch of shares, 159. And if it does go back to that $2, unfortunately, I'll be in a sticky situation where I can't really do much about it other than wait or buy more. But if I option trade on bigger names, I can either cut my losses short with some small losses. Like you can see this debit spread, I might lose a little bit on it. And especially if it runs hot, I will lose a bit more. But you can see my losses are very short-winded. And again, with the gains, I do have some called debit spreads, which are very bullish strategies on SoFi. Here's another one. I basically need SoFi to stay above $25 or $26, which is looking pretty good, but we'll see. Same with Riot. I need it to stay above $17, I believe. Is this a, no, it's a put debit spread. I'm trying to find the other one. That's this called debit spread. This one is a bullish strategy. I need it to stay above $16 or $17 realistically. And it is so far there, but we'll see where things go. I also have some put credit spreads on IBIT, Mara, and Oscar. These are bullish strategies, but again, if the trades go against me, I'll only lose a fraction of what I would be losing if I were to hold the shares. So that's why I'm using options as a tool and allowing to ride the wave. So if the market pulls back, I obviously have cash, so I can buy shares and also do bigger plays or do other kind of plays to get into using that cash. But on the other hand, I do have some hedging strategies that I can utilize. One of the stocks that I did put up a lot of cash collateral was this cash secured put on Archer. And Archer did run up quite a bit today and has been running up this past week 10%. So this is one of those that I did use cash collateral or a big position, which I'm okay with. If this stock does drop below my strike price, I'm okay with owning it. And another reason I'm not doing cash secured puts on stocks that I already own is because I'm already green. I don't want my cost basis to be so high up, especially right now. I don't want to be buying shares right now. Something like Riot, I don't want to be doing cash secured puts at that $15 level, acquiring shares, and then be in a tough situation where I have to figure out what my game plan is. And that's why I'm very selective of what I'm doing. Archer is one of the few that I do have a cash secured put on. I do have one more cash secured put on Mara, but this one is looking like it's going to expire worthless, and therefore I'll collect a net gain of $43. I tried to close this early, but unfortunately I didn't get filled, so I might just let this go to expiration and let things play out. Because if Mara drops to 13.5, I would actually be really interested in buying, and I'm sure a lot of others will also be interested in buying, so that's why I'm having that open. But you can see very small trades or smaller amount trades, very risk-defined trades. So if I do lose my trade, it is not like I will blow up my account or lose everything. These are very small percentages of my account, about 1% per trade. And you can see I have a lot more trades open than I do actually have stocks owned, which is what I think is a good strategy right now. We'll see how things play out. If things start running hot, my stocks will obviously do well. Oscar is one that did drop pretty significantly, and I do have a covered call at that $20 or $19. So if it runs up, I'll probably roll or just let it get assigned and lose those shares, and honestly just have those gains be collected. Because right now, you don't want to be in a situation where you round trip, especially you're seeing everyone talk about their year-to-date returns or their insane returns. You don't want to be in a situation where you were flexing all this and then you get quickly round trip and lose all those gains. So just to sum things up, Powell said stocks are fairly highly valued, which I sort of agree with, and markets took a hit because of this. open, one of my stocks dropped hard, and crypto as well. Crypto not as bad. I'm pretty much even on the day on crypto, but it is a reminder that even in a bull market, things can turn quick. I am aware, or there is a known thing about around this time. September is pretty bearish. So I'm not too concerned with these current movements, but it is of note that these next few days are notably a volatile or bearish time. So don't get sucked into the hype. And remember, the Fed still has big influence on where the markets go next. Until next time, peace.